everyone. Happy Sunday. This is Simon with AvaTrade, and we're starting our weekly trading plan webinar. I want to welcome everyone, of course, and a special welcome to the new people that's coming to the webinar for the first time. And for you, just a few words of explanation of what to expect. Basically, as I always say, the title says it all. We're trying to make a plan for the week, and that includes going through specific events to look at the big picture, what's happening in the world and financial world. And then we'll look a little bit at technical analysis and specific instruments and trying to see what potential scenarios are possible for the upcoming week. That's pretty much it. So this is our title. Now, a few words about myself. It's kind of funny, I repeat it every week, but for the new people, my name is Simon Friedman. I'm a senior account manager with AvaTrade, and I have over 22 years of experience. I started as a licensed professional proprietary trader back in New York City. I worked in a few Wall Street firms, and after 11 years of doing it, I moved to doing different things, and I was mentoring and educating other traders. And currently, as I said, I work for AvaTrade, and I work with customers trying to share my knowledge and experience as far as I can. Now, this is the agenda of the webinar. Usually, that's what we do. We go through indices, stocks, commodities, and FX. And these are the channels that you can keep in touch with us. Very important, a lot of useful information. So that's Telegram, that's Twitter, and as I always say, my favorite YouTube channel. A lot of information there. You can subscribe to the channel. You can click on that bell so you'll be notified of new things. And we have new recordings being posted on a daily basis. And of course, you have tutorials and things that can be useful to new people, and market reviews and other things that being updated regularly. And of course, risk warning. You can read it. You can access a full document at avatrade.com. Very important. Now, I want to start with this screenshot that I took from MarketWatch, and I'm just going to read it to you. Goldman Sachs finally decided to stop fighting the Fed and lowered its year-end forecast for S&P 500. The Fed made clear Wednesday that it is likely to continue lifting interest rates aggressively when it raised the federal fund rate by 0.75 percentage point, and indicated, and this is the key thing, that the peak Fed funds rate could get about 4.5%. Just to let you know, initially they were expecting it to be between 3.25% to 3.5%, so it's a high expectation. And I'm continuing to quote: "The Fed is trying to rein a high inflation by reducing economic demand, which is likely to continue denting corporate earnings," and even highlighted it. Now, Goldman Sachs strategists are lowering their price target for S&P 500. The strategists see the index trading at 3,600 by the end of the year, down from the prior forecast of 4,300. The new target represents a small drop from the index's current level of just under 3,700. That's where we are now. But the point is that confidence in the market is weakening. The expected path of interest rates is now higher than we previously assumed, which tilts the distribution of equity market outcome below our prior forecast, writes Goldman's chief U.S. equity strategist, David Kostin. Okay, so this is from Markets Watch, and this is directly from Goldman. As we know, Goldman is a leader in the industry, and people are listening to what they have to say. And what does it tell us? Okay, nice article. We all knew, we spoke about it every week. Everybody knows the market's going down, but now they give up on resisting it, and they're saying 3,600. So we'll take a look at the chart in a moment, but we're pretty much there already. Um, Before we go to the economic calendar, just let's spend a minute reflecting of what's happening and what happened. As the article said, we all know we were expecting it. 0.75 interest rate decision happened on Wednesday, and then the press conference was affecting the market heavily as the policy and the mood and the um, verbs or whatever they're trying to do is the same course. What they do, they don't care, and it's a strong message there. They do anything and everything to lower the inflation to bring it back to 2%. So that's what actually happened at the press conference. We all expected it. It's nothing new. Just some were hoping that the language would be softer. It wasn't. So the market reacted to it. Now, what else is happening? We had a new development from Russia with President Putin announcing mobilization, and they're really taking people in, and the world is reacting to it. Everything else is reacting to it. We'll take a look at the moment in the oil and natural gas as well. And what else? Just my observation. The market's sold out. We're really touching. We'll be taking a look at the charts at the moment. We're really touching. In some cases, we already did touch the lows of June, but the VIX has not. The VIX reacted to it as just for those of you that are new, it's a volatility index of S&P 500. They touched the highs of $32.31 on Friday, but they settled the close at 29.92. And just to give you a little bit of an idea, on June 13, when the market sold out, and that's the last low we had, the VIX reached $35.05. So we didn't get there yet. And something that I remember from the June lows, there were a lot of analysts on CNBC and everywhere else. I remember one speaker, don't remember his name though. He said, "There's no brainer. When you see VIX reaching 34, you just buy." And the next day, the market started recovering. We had a nice run from there. So I guess we're getting into that zone that maybe we'll see some buyers coming in. But in general, the mood, the big picture is expectation for lower prices for the equities. Okay, let's take a look at the calendar for the upcoming week. And again, for new people, I always will repeat this importance of following the economic calendar. You believe in it or you don't believe in it, just knowing that certain events are happening, it's important. So this way, you get ready, you get prepared. Either you enter the trades or the opposite, you stay away from them. Depends on what you do. And as you remember, I always say that here I just take the high impact events, and that's why they show here in red. And let's take a look at them. So we have on Sunday, we have, which is today pretty much, we have the Italian Parliament electing a new president. Very nice. Monday, we have Governor of Bank of Japan speaking. We have Governor or President of ECB Lagarde speaking on the same day. On Tuesday, we have another speech of Lagarde. We have durable goods from US. We have monetary policy minutes from Bank of Japan. That's also on Tuesday. Wednesday, retail sales from Australia, another speech of Lagarde, and Fed's Chair Powell speaking on Wednesday as well. Now we have Germany CPI numbers. We have gross domestic product or GDP numbers from US. And Friday, we have PMI numbers from China. GDP numbers from UK, retail sales from Germany, and CPI, and that's the way of CPI numbers from European Union. Now, as I said, I take only the high impact events here, but this week I added the medium impact. Why? Because this event is very important. It's really highly followed by the Fed. So this is the core personal consumption expenditure price index, and that's coming out on Friday. And the times are here. It's GMT times. So you can check on the calendar. Again, there's a lot of sources. You can find them on our app and on our web trader or third party, or a lot of sources for economic calendar. Now, so this is Friday's announcement or numbers that are coming out on Friday. The Feds are really watching these numbers. Okay, so we're done with the economic calendar and the big picture. Let's move to trading terminal. And let's start with S&Ps. So we're still fresh. As I read to you the article or the screenshot of it, that they set up a target or a level of S&Ps for the end of the year, 3,600. Now take a look. On Friday, we're as low as 36.60 and a quarter, so we're almost there. Now, the $1 million question: will we break the June's low? And this is the June's low right here that I mentioned to you. On June 16th, the S&Ps were at 36.42. We're trying to confirm that or test it. Now, weekly chart, it shows it a little bit clearer. And if we draw the horizontal line around these levels, take a look. We bounced from it at the previous pullback, and that was back in January of 2021. So we had a lot of accumulation here, holding these levels around, let's say 36.50. Then we came back in June to these levels here. We confirmed the support, the previous support, and then we tried to run, and we had a nice run here, but we're right back. Okay, so take a look. We just had the two straight down weeks, a pretty strong selling happening here, and on the high volume as well. So there's a lot of pressure, the down pressure in the market. So this is the S&Ps. Now let's take a look at Dow Jones. Dow Jones actually on Friday broke below the June's sell-off level, but we did close very close to it. So it was a little bit pullback again. Now let's take a look on daily chart. As you could see here, probably happened the last hour exactly. Take a look, the last hour of trading, we just came back and just to close above that low of June. Interesting, something to think about. So that's on Dow Jones. Nasdaq, we also holding very weak, but we're kind of holding that June's low. So again, no brainer. This week is going to be very interesting. And technically speaking, if we start closing this week below the June's low, that might attract more sellers, and we'll see continuation to the downside, as fundamentally everything shows for it. So just to give you an idea, Dow Jones dropped on Friday 1.6%, and S&Ps dropped 1.7%, and Nasdaq dropped 1.8%. So again, if we talk about indices, very strong downside pressure on it. Now, if you take a look at the Europeans, actually DAX, European DAX, or German DAX in this case, it closed below the June's low. FTSE didn't get there yet, but as I discussed with you a few times, FTSE shows probably the most realistic picture. It never had the crazy run that U.S. indices had. So it is kind of holding or not really selling crazy as the U.S. indices. Now, Nikkei also had two down weeks, and we are back. We touched, as you know, as I always say, I love technical analysis. I'm not trying to convince anybody that it works. Nothing works 100%, but as you could see, certain things make sense. Certain levels hold, similar to what I showed you in case of Dow Jones, as we came right back and closed pretty much on the same level. So Nikkei, similar idea. Why am I showing the levels or talking about the levels? That's what the traders are doing. They're looking for the levels to place the orders, and they think, or we all think, that it's safer or more secure or makes more sense to buy closer to certain levels, historical levels that held in the past. There's no guarantee, of course, levels are being broken, but it gives a little bit of the edge, gives a little bit of the structure for the traders knowing certain levels. Now, China, we spoke about China. The moment we break 1300, we're going to go lower, and that's exactly what happened. A lot of issues there. The numbers coming out, they also have some political issues starting to happening. I think this week, one of the high-ranked politicians or a judge or someone, I'm not really sure about details, he got a lifetime sentence, and they are preparing for the elections. So I think certain things are not so smooth there. I'm not big in politics. I'm not going to go into discussing it, but China's having a lot of issues. Let's put it that way. So as we speak about China, I always do this, and I'll do the same thing today. I just want to bring copper to you and take a look on the China selling. Copper is also refusing to hold to some gains that happened in the past few weeks. We are selling. We broke through this recent support, and we might go and retest 330 level on copper. And again, for the new traders, why am I jumping into copper from China? As you know, or will know, or should know, China is the big user of copper, and the moment Chinese market is booming, copper is booming, and vice versa. So as you could see, as the Chinese economy is not doing that great, copper tried to run, but failed it, and it's selling off. The same thing, of course, for currencies. Australian and New Zealand dollars really selling, but it's not the only reason. We'll talk about US dollar in a moment. This is the main reason why other currencies are selling against the US dollar. So as you could see, because of China, you have copper, New Zealand dollar, and Australian dollars are selling. So let's talk about specific stocks for a moment. And one of the stocks, the big names, as we know, Facebook, or it's Meta now. If you're ready for this, fasten your seatbelts. Take a look. We are reaching the levels of the lows of pandemic. At that time, it was Corona. It was called Corona. Take a look. Facebook is really falling out of bed, and they're having a lot of issues. I think, if I'm not mistaken, they're about to cut 10% of the employees. And the low here, the lowest point of the week of March the 15th was 136.98, and the lowest point on Friday, 138.76. We are less than $2 away from their mark. Just something to think about. Now, in the big picture, if you zoom out from the monthly chart, we're really not that far from the next checkpoint, which was 2018 in December, and that level was at 122.93. I'm just throwing in the numbers. Anything can happen, but it looks like nobody wants the stock. Other stocks sold, of course, but they're not even close to these levels here. They are holding, still holding, most of them about the lows of June of this year. So next one, I just want to talk about, it's Twitter. Twitter is holding, and there are a few developments happening there. And I just made a little bit of a research there, and it looks like the Twitter lawsuit will go for a 5-day trial, and that starts on October 17th. So I guess the closer we get to that trial date, which will last for 5 days, according to the news, we'll see probably a lot of actions in Twitter, of course, in Tesla as well. But Tesla has been selling. I mentioned to you last week that we came to the levels of the split around 304, 305. We had a nice move from there to the highs of 313. That was on 20th of September. And as the market sold in the past few days, we came and it looks like we're retesting the recent lows. So Twitter is going with the market, with the gravity. So Twitter Tesla, again, just to remind everyone that the trial will start on October 17th, and they're expecting the 5-day trial. Maybe we'll have in 5 years, I'm not sure. But yes, that was my mistake, 5 days. So another one that we've been talking about for the past few weeks is Teva Pharmaceutical. It's a pharmaceutical company that's focusing on generic medicine. And so far it's been selling. Just to remind everyone, a few weeks ago, we spoke about it when this move happened. They upgraded it to $13 target, and we had a nice move. We went as high as 11.3, and then lately we've been selling. Maybe we'll try to close the gap here. Maybe we'll bounce sooner than that, but it looks like it goes down, of course, with general market. But you know, a regular logical explanation went too high too fast. So now it's kind of retesting the supports, and it's failing one by one. So let's see what's next. Now Apple stock is back to the checkpoint 150. That seems to be a key level here. Take a look. Back in March of this year, back in June of this year, back in end of July, and we are playing around this level again, 150. So far, Apple was managing to hold it. Now, there's some reports about the new iPhone. They say the iPhone 14 Pro is the winner. I didn't go deep into that fundamentally, but it looks like it's holding, you know, as opposed to Facebook that I just showed you. It's really holding to this 150. That's it pretty much. I'm not going to go into the stocks because it's just general mood. As you know, the market is selling, and that's what I always say. Even the best stocks are selling on the selling market. So, and that's what's been happening. So let's move to commodities, and we'll take a look at crude oil. As I mentioned to you, Putin just announced the new move, and they bringing regular people to the army. Pretty much, they take them off the streets. It's really sad, and they started coming to the streets and really protesting in big cities and so on. Again, I don't want to focus on it because it makes me very upset, but it's the next level of issues and chaos. So now, normally, would probably see the oil going down, going up, for that matter. But because of the economy getting weaker and potentially even weaker, we had oil falling through the recent support, and we spoke about it. This level here at 81.5, we just broke through it on Friday. Now let's just zoom out and see what's potentially could be happening in oil here. So we are really approaching the 100 moving average on oil. Let's see how we are holding there. and that's around $76, $77. If we are breaking that level, if the 76, 75 is broken, we could go and retest the next levels, and that's going to be around $65 possible. Of course, the even numbers or round numbers of 70 could hold it. Again, I don't want to pretend that I can predict anything. It's not my job, and I never like to be a predictor. But in this case, there's a lot of things that can influence it. Of course, the issues with Russia, the economy, the numbers coming out, and so on. But as of now, we know the 81.5 was broken in a very simple way. So we might even go higher and retest, because as I always say, that when the level is broken, it has to be confirmed to be the opposite. So here it was a support. Now we might see the attempt to break above it again. And if we don't, that's going to be confirmed that support became a resistance. So that's also a scenario. And in most cases, it is happening. Okay, so just to give you an example, for instance, here we broke, as you could see, we've been holding here. Just to give you an example, we're holding at around $99. As you could see, we keep on bouncing, and then we had a nice breakthrough. And it didn't go straight down. It came to retest the level until it was really confirmed or proven to be a resistance. So similar idea could be happening here. I just want to give you the idea what potentially could be happening. So again, we could bounce back and retest the 81.5, and if we confirm that that is becoming a resistance, we might continue and most likely continue to the downside. Now, natural gas also had a pretty rough week. As you could see, the moment we broke 8, we just went straight and breaking 7, and we settle around 6.85, right below $7. And we are actually right on 200 moving average on the daily chart. So again, we didn't have a strong confirmation that we're going lower here. There's no action yet below $7. So we'll be watching this week what's happening. And similar to the oil, if we start building below $7, we might go and retest around $6 area. If we bounce straight above the $7 and start building support, there's a potential of moving higher. And of course, there's a whole fundamental thing with Europe trying to move away of depending on Russian natural gas. And so far, it looks like they're succeeding, even though it's a little bit hard for them. The prices went super, super high, but they're managing so far, and they're filling their storages for the winter so far. So that's as far as the energy. Now, gold. As I said to you, that's something important to watch. That's the 10 years yields. And we said that they broke around about 3.5 and continued higher. It was very strong this week, and gold was selling. And of course, on the strength of US dollar. And again, speaking of US dollar, we're going to talk about it in a moment. A lot of analysts are saying don't expect the markets, we're talking about equity markets, to bottom before the weakness of the US dollar. So I'll leave it for the Forex for the moment, but here, strong US dollar is also not helping the price of gold. So I know a lot of people are trading gold. Let's take a look what potentially could be happening in gold the upcoming week. Okay, I lost my mouth for a moment. Okay, so let's go for the weekly chart. Now take a look. On the weekly, it's really clear how we broke below 1700. That was a support for a moment. And last week, we really held around 200 moving average, but we're down this week. Now, as far as levels on the weekly chart, nothing's holding gold till the next level, and that's probably be between 1580 and 1600. that's a possibility of continuation to those levels. If you take a look at the monthly chart, we are on the 50 moving average on the monthly chart. I don't know if that means anything, but as far as the levels, as you could see, some serious actions happen around 1580, 1600. So we're not that far from it. And there's a possibility that we continue lower, especially here on the weekly chart. We broke through the 200 moving average. On the daily chart, of course, we're below all the averages. So again, unless we see some pullback in the US dollar and the yields of the 10-year treasuries, gold has the potential of continuation to the downside. As you could see, after this initial move, we had a few days or a week of really accumulating here. And it looks like the sellers won and we just went lower. So that's as far as gold. Silver, on the other hand, it's holding much stronger than the gold. And we are holding this around, what's the closing here was 1879. So around 1870 level has been holding. So this accumulation, similar to gold's accumulation, it's really not broken yet. So let's see what happens. Of course, two things can happen. We can break through this level of accumulation and go retest the recent lows, or the opposite could happen if they decide to run it higher. Now, soft commodities, we talk about them every week pretty much. Wheat had a nice attempt, and just to remind you, the whole idea of us discussing it, if you remember, I mentioned to you that we were sitting in this accumulation channel between 750 and 800, and I give you the analogy with this side right here, after which we had a nice move to the upside. So similar idea, we were really accumulating here, and if you remember, I mentioned the moment we start building some support above 900, it's going to be potentially a continuation of this move, maybe not as strong, and that was a beautiful play. Okay, as you could see, accumulation, closing above, retesting, establishing the support, and we moved another 500 points, and then similar idea over here. We went up, we established support, we had the freight breakdown, recovery right back, and we actually almost reached this level over here. This high was around 939, and I think on Thursday we reached 922 and a quarter. So in general, it was a very nice play. Now what's next? We'll just take it day by day. The next is very simple. Friday was a sell-off, so now potentially they might bring it down to around this 846, 850 level. And if we're still holding it, we might have another accumulation before moving higher. And then if we break below and start building up a resistance below the 846, then we just step to the next level of 800 and so on. So as of now, we pretty much in the middle between the 846, our support, and the next level of resistance around 930. So that's something to watch. Now, we spoke about cotton and coffee, I think, last week. Coffee had a nice play, and we mentioned that 210 could be the support, and it played very nicely. It came to the support on the 19th, had a nice move to the upside, and now it's kind of retracing to the downside. Now let's see what's next. We might continue to the upside from here, or come and retest again the 210 area. And cotton didn't hold it. As you could see, we spoke about this level around 99. We didn't hold it, we broke down. Now again here, we might go lower and retest this level over here. And that's around 90, 89, 91. That was a support. And bounce from there, or we might even break to the downside and continue lower. Now, if we go straight up, we're going to have to fight this 99 level again. And if we were to see continuation to the upside, we need to establish a support on this level. So now we're trading between 99 and 89 pretty much. Okay, something to watch. Now let's move to Forex, and we start with dollar index. And it's just, up through the skies. And just to give you an idea, and I did a little bit of research. So the pound, the British pound, fell to a 37-year low against the dollar. So let's take a look. It just diving. That is crazy. I don't know. I apologize. Something is happening with my mouse here. So if you just zoom out, I don't even see any relevant levels here. I don't know. So pound, again, last week they did increase the interest rate by 0.5%. I guess there's an issue there, and maybe the traders were expected more intense or more aggressive actions from a Bank of England. Didn't happen, and we are at 108.49. As I said, it's a 37-year-old low against the US dollar. Now, euro, it's at all-time low. It looks like it, below 0.98, and this is something interesting. That is yen. Now, yen hit a new recent dollar hit a new recent high against the yen, and then on Thursday, this move. I just want to bring 1 hour chart just to show you. You see this drop out of nowhere. The US dollar dropped, and according to Bank of Japan, they did the intervention. They intervened first time since 1998. They intervened to make the yen stronger, because they've done it many times for the opposite purpose, to lower the value of the yen, and this is the first time since 1998 they did it. I don't really know how exactly it's done on the banking level, purchasing another currency or whatever it is, but this was a super drastic move on the market. Take a look. Before that happened, we were almost at 146, 145.89, and within 2 hours, we dropped as low as 140.66. That is 530 pips move. And then, of course, we recovered half of the move, probably just visually looking at it. So somebody got lucky. Others probably the opposite. Of course, there's always two camps, the buyers and the sellers. So whoever was short in this was lucky, and I hope they got out with a nice profit. And whoever was long, that was painful to be there. So again, these things, they're never being announced. And this is the beauty and maybe side effect as well of the financial markets. Certain things happen, but this move is really crazy, and it's a very short period of time and a huge move. So now back to pound. Pound's been super, super weak. I just want to show you the pairs that do with pound. They all moved significantly. That's pound Canadian, pound Australian, pound New Zealand. Again, huge move. We might have continuation, or if we hear something, or maybe surprise moves by Bank of England. There's a lot of pressure on them, and of course, the new prime minister that just started her position, it's going to have a hard time, and politically, it's going to be hard as well. And of course, the Bank of England, they need to do something to deal with this. So pound is in focus, and it looks like it's the weakest currency currently against the majors, and that's something to pay attention. Even euro, which hit a super low level against the dollar, it's super strong against the pound. So that's as far as Forex. Now, we'll see what's happening. We'll see what's the Friday report that is coming up with the consumer expenditure that we mentioned. And let's take a look at the moment at Bitcoin. Something interesting, the dollar went lower on Friday. The Bitcoin didn't. So it looks like 19,000 is being holding here. So as we watched recently, that's very sensitive to the market and the strength of the dollar. So as the dollar had the crazy move on Thursday and Friday, so if it was totally attached to it, we would have seen breaking through the lows on Bitcoin. So it looks like some buying is being happening here. So it's very interesting if it holds. We might go and retest the 20,000. And again, it's all a relative strength, like I said, on the market moving lower and the dollar moving significantly higher. Bitcoin should have broke through the lows, and it didn't. So it looks like some buying is happening there. And similar idea on the Ethereum. Okay, so one more thing, because I know a lot of people are watching, and just wanted to bring the USD ZAR, and we did break through that resistance that I mentioned, and it looks like here the skies are clear. So again, we broke through it. We might go and retest and establish the support, and then continue higher on the USD ZAR. Okay, so that's it pretty much. Just to wrap it up in 2 words, in general, the market is experiencing very strong downside pressure, and it will continue. As we said, Goldman Sachs is predicting now the 3,600, which we're already almost there for S&P 500 for the end of the year. Now, dollar is continuing to be super strong. Gold is selling, oil is selling on the investors being scared of a lower demand when the economy is not really looking that great. And one thing I forgot to show you, take a look at the banks, something I meant to show you with the Citibank, Goldman Sachs, JP Morgan, they're really selling off. And one of the things that the balance or debt of the US consumers is really growing. People can't afford to pay up their balances on the credit cards, and that's a big threat potentially to the banks. So the banks are really selling there. So again, for us traders, we can see we're not investors. We're not sitting for years in the value stocks, even though some are. But we take this as a great opportunity. Volatility is always good for the traders. So we will continue looking for and finding opportunities in trading, and that's the beauty of it. There's always something happening. So I want to wish everyone an amazing weekend. Get your rest, get your energy, and hopefully we'll have another great week of trading. I wish everyone lots of success, health, and all the best to you and your family. Take care.